I want to talk about a chart that Sebastian at Salsa Invest on Twitter or X put out the other day, because I think it's helpful for us as Lemonade investors to see the trend, the overall trend that the company is on, or at least has been on. Will they continue? That's something we'll discuss here in the video as well. Will this trend continue? But it's an important trend to understand. And his chart here is gross earned or adjusted EBITDA as a percentage of gross earned premium. You could kind of be inspired by this graph from Lemonade's S1, where they had adjusted EBITDA margin. They showed it went from minus 200% in 2018 to minus 73% in 2020. Now, this was based on revenue, not gross earned premium. I think gross earned premium is a little bit better, as Sebastian has done, because revenue numbers have changed, or sort of artificially changed based on reinsurance for Lemonade. But if you look at based on gross earned premium, it's a pretty steady rise over time, or has been at least a pretty steady rise. I made my own version of this chart. You can find it in my Lemonade model under a graph called adjusted EBITDA per gross earned premium. This whole model is available to my Patreon members. Feel free to join my Patreon if you want to support the channel and want access to this. But I've plotted out adjusted EBITDA per gross earned premium, and also have a nice trend line showing that the average trend over time. And as you can see, it was pretty bad back in 2018 on a quarterly basis. Pretty bad. It's sort of improved. There's a little bit of lumpiness on a quarterly basis, up and down. Some of that's seasonality. Some of that's just catastrophic events that happen to occur. But it's overall, the trend has been consistently improving to where we are now, Q3 or Q2 of 2023 right here. And then the rest of these graphs, bars that I've put in, are based on where my model's at right now, and that's evolving and changing over time. But where my model's at right now is roughly based on where their guidance is for the rest of this year, plus where Lemonade's sort of longer term, really rough guidance that they released at during their investor day. So based on those two factors, you're seeing they're starting to reach, a 7% by 2027, the end of it. They're about 7% adjusted EBITDA profit out of their gross earned premium. And they're looking at kind of, this trend line is crossing around Q3, Q4 of 2025. My actual model shows break even in Q2 of 2026, first bit of profit in Q3 2026. So somewhere, I think around in 2026 is where this trend line should be going. But the actual, historical data we have from Q2 backwards is a really positive sign of how things are headed. Of course, there's no guarantee it's going to continue into the future. Maybe it's going to flatline or even get worse. No one knows that for sure, but I think there's pretty good reason that this trend could continue, at least in my mind. We've talked about their loss ratio, how their loss ratio should get better as more and more of their price increases are approved by regulators and take effect in the markets they're in. And they're also, as their own underwriting of the different products they have continues to improve over time, and they pick the right customers in the right locations that they really want. So I think there's pretty good reasoning and rationale why the loss ratio should improve, and this trend should keep improving over time. The other factor is their operating expenses. And I think if you look back at Lemonade, one of their blog posts by Shai, he talked about the rise of the autonomous organization. And interesting blog post written quite a few years ago now, but he talks about how you're expecting to reach a point where you sort of plateau the number of employees in a company, but then you become hyper efficient and you use AI to the fullest advantage to be able to have a ton of operating leverage in an industry or in a market like Lemonade, where you're serving information basically to customers. You're assessing risk and serving them a digital policy. So it's all kind of digital, and it's a type of market that's well suited to this kind of massive operating leverage. So for Lemonade specifically, we'll have to see as each quarter unfolds, but I think there's a good chance their number of employees really starts to plateau and hover out to around where it is. Of course, it could go up and down could have some employee growth, but I think that's where we should see it. The number of employees should sort of plateau. The in-force premium or gross earned premium per employee should really start to spike, and also the number of policies should really start to spike as they continue to become more efficient. Shai answered one of my questions on this during the SAY question and answer time of Q4 2022. I asked about how do you plan to reduce costs further and become as efficient as possible. And he wrote about several posts about the vision of the autonomous organization, how we're using technology to lead the market in efficiency. And he says, much of our costlier tech infrastructure building is behind us. We slowed our headcount growth significantly. And he says below, it's also worth noting their expense ratio today is built for scale. We should be able to continue to grow very significantly without matching increasing costs. Back to our graph here, of course, all that to say, I think there's a good chance we should see the number of employees somewhat plateau, maybe have a little bit of growth. And within that, then hopefully their operating expenses should have somewhat plateaued, limited amount of growth versus how much their top line, how much their gross earned premium, in-force premium still be growing. And that's what's really going to carry us through into profitability. That along with the improvements in the loss ratio. You stack those two things together and they just keep growing the top line. They're going to see a lot of operating leverage, and my guess is something like this graph is going to be true, and we're going to reach profitability 2026 sort of range. Of course, we could be wrong. Nothing on this channel is personal financial advice. Of course, there's a lot of uncertainty around this, whether this is really going to execute or not, whether they can actually become as hyper efficient as they aspire to be is still to be determined. But I think in the midst of that sort of market uncertainty, my thought is there's still a lot of optimism and a lot of reasoning and a lot of rationale that they could reach that. Two other graphs to quickly show you a little more color and detail around this that I have here in my model is employee count. So employee count over the time here has risen up to 1367 and actually has dropped slightly from Q4 to Q2. So again, you kind of think this should sort of plateau or maybe have only slight growth, but then your in-force premium per employee has risen from, Q4 of 2019 was $346,000 per employee, and now we're up to $515,000 per employee. And that did dip as they rolling out quite a more products here, but has now come back to and improved upon their previous numbers. And again, I think we'll continue to see this rise, maybe similarly to that trend line. So I hope this gives you some interesting thoughts about Lemonade, where they've been going, where they might go. I'd love to hear what you think of all this. Let us know in the comments down below. Find me on Twitter or X at PaperBagInvest. And remember, it's in the bag.